Hooty-hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Friday, March 5th. We got a lot of volatility in the stock market. At the time of this recording, though, with the Dow's up about 100, the Nasdaq's down about 100. We've had a big pullback in the Nasdaq. We're down about 10% from the record highs. Now, is this a buying opportunity? I think it is. I want to use precaution here. I do think that pullback has more to go. Now, I'm starting to nibble on some stocks here at down 10% on the NASDAQ, but I think the pullback, the correction, if you will, could drop to 20% on the NASDAQ, which means we could still have another 10% down move. But some of the stocks have just come down so hard so fast. Look at Tesla, for example. Tesla was trading at $900 approximately a month ago. This morning you can buy that for $580. Is it going to bounce back up from here? Yes. Could it drop a lot lower? Oh, yes, it could. Tesla's had quite the run. But there's a lot of stocks right now that are starting to they're starting to look attractive, let's say. Things like Microsoft, Apple, Facebook, a lot of the technology stocks have come in a lot. Should you be buying this bounce? Looking for a bounce. I'll be nibbling here. I'd be picking up a few things, but yes, we can still fall another 10% in the NASDAQ. Do I think this is the big crash? No, I do not. No, I do not. Now, here's why. We got the Federal Reserve. All right. So let's talk about this past week. We had good news. We lost another 745,000 jobs. Okay, 745,000 jobs does not sound like good news. Well, they were expecting 750,000. Now, to me, that's just a rounding error. But they call it good news. Okay, the Federal Reserve is going to come in and they're going to print an atrocious amount of money. Now, what happened yesterday when Fed Powell, chairman, was talking? He was talking and he kind of slipped up a little bit, or maybe he planned it. Maybe he's a smart guy and knew exactly what he was doing when he says he expects inflation to spike up. What did that do? It sent the markets come tumbling down, and it sent the 10-year bond up. 10-year bond was up above 1.6 this morning. Now it's come back a little bit, but apparently the market doesn't like it when it's up here, and it is stretched. I do expect the bond to come back into 1.4, 1.3, and this should get a bounce in the stock market. Okay, that's all fine and dandy, but can the Federal Reserve save us? Look at it. They do not want asset prices to come down. They know the only thing holding this market up is an asset bubble. They're pumping air into the bubble, more air into the bubble. Now, can they do it? They cannot let prices come down. They cannot let the stock market fall at this point. If it does, we are in for a lot of pain and a lot of trouble, and I just do not think that the Federal Reserve is ready for that pain and suffering yet. It's coming. It's coming later. It's not coming yet. We're still in an upward trend. A lot of people are freaking out because the NASDAQ's down 10%. It's only down 10%. That's nothing. When it finally does fall, it's going to fall about 80%. 10%'s nothing. And I do think we'll probably get down to the 15% in this correction, and then we'll start to move higher, and we will hit record highs with the printing of money. Now, can the Federal Reserve save the stock market? Can they save the world? Because when the stock market comes crashing down, that's pretty much the end of the world. Okay, I think they're going to save the world temporarily with an infusion of massive printing. Now, when the Fed Chairman Powell was talking yesterday, it's just so obnoxious. I hate his arrogance. You know, he sits back and he tells us, look, we have so many tools we can use. We can use this tool. We can use this tool. He doesn't have any tools left to use. Look, the interest rates are down close to zero on the short end. Now they're creeping up on the high end. Now, close to zero is and they can control. They can actually lower it, but there's nowhere to lower it to. He cannot take it to negative interest rates. What happens when he takes it to negative interest rate? Money market funds that pay a negative interest rate, you're going to take your money out of those money market funds. You're going to withdraw all of your money. He cannot go to negative interest rates until we move to a digital currency. Now, do I think we're going to move to a digital currency eventually? But we're not there yet. I can still walk into the bank and demand cash. I can pull all my money out of the bank. And that's exactly what everyone's going to do if we go to a negative interest rate. So he cannot use interest rates, lowering interest rates anymore. He's already at zero. He doesn't want to go negative. He can't go negative. So he has one tool and one tool only that he can use, and that is to print more money. And he's going to use that tool. He is going to print and print and print and print money. And this is the fleecing of America. America is going to get fleeced because what happens? Prices go up and up and up. When he prints money, it is like a tax to everyone. It's a tax to everyone because you're paying more at the gas pump. You're paying more at the grocery store. You're paying more for your rent. Now, I know I sound like a broken record, but that's just the facts. When they print money, prices go higher. Now, what I want to talk a little bit about today, I get such a kick out of watching the market. I love to watch the market. I love to watch what's going on. And when I talk about how the Fed is fleecing America, there's some other people that are fleecing America. I want to talk about ETFs and SPAC, Special Purpose Acquisition Companies. These are fleecing America. Now, these people, let's talk about the SPACs first. These are called SPACs. Now, what is a SPAC? A SPAC is basically a hedge fund. Let's look at it as like a hedge fund where people put money in, and the people that run the SPAC, they take that money and they go buy a company. Now, these are people, okay, let me just tell you some of the people that are running a SPAC right now. We got A-Rod. We got Colin Kaepernick. We got Shaq. Shaq has a Shaq SPAC. I mean, yes, there's professional like Chamath in there, but most of these people, actually I'd say all of these people, they did not make their money investing in the stock market. They did not. A-Rod made his money playing baseball. Kaepernick made it playing football. Shaq made it playing basketball. What do they know about investing? What they know about investing is they can raise money because they're popular, they're a personality. They can get people to invest in their funds. Now, even Snoop Dogg raised $500 million for a SPAC. Now, okay, A-Rod, I think he's raised $500 million. Shaq, he's trying for $1 billion. Chamath has many billions. But they don't put their own money in. They want you to put your money in. Now, why is that? Okay, let's say that they can go out, and A-Rod can go out and raise $1 billion from other people's money. It goes into what's called the Special Purpose Acquisition Company. Now, A-Rod can now take that $1 billion and go buy a company. Now, there's not a lot of companies for sale, but let's say he goes out and buys, that's called a dog walking app for your phone. So you can, on your app, you can schedule a dog walker to come and walk your dog. $1 billion he pays for the company. Now, what happens? Well, A-Rod gets 20% of the $1 billion for putting it together. He gets $200 million. A 20% take when he buys a company. Now, he hasn't bought a company yet, but isn't that incredible? That's what a SPAC is. These people are taking 20% for just finding the company and buying it. Okay, now you as an investor, I would say you're kind of the bag holder. You're the bag holder. These SPACs normally don't turn out well. Now, what we also got is these ETFs. Now, Dave Portnoy, I don't know if I say his name right or not. But anyways, he just started an ETF. It's called Buzz. B-U-Z-Z. Okay, now this is based upon social media. Now, Dave Portnoy, he's got an ETF fund going. Now, why does he have an ETF? He's from Barstool Sports is what his company is. He didn't make his money investing. He made it in Barstool Sports. He's not an investor, but he's going to invest your money. He's got to raise billions of dollars, and he's going to take a 20% cut of the profits. Now, okay, well, what's the number one thing they're going to invest in? Well, they're going to invest in Tesla, and they're going to take 20% of the profits. Okay, let's take a look at ARK Innovation. ARKK is the symbol. ARK Innovation, it's an ETF. Now, it's run by a lady named Kathy Woods. Now, everybody thinks she's amazing because she's getting 100% return a year. They think she's a genius stock picker. Okay, well, let's take a look at this up close. Now, just since March, her ETF, ARKK, went up 200% since March. Now, what is her number one holding? Well, everybody's number one holding is this Tesla stock. This Tesla stock, they're gambling with your money. They raise billions of dollars and they gamble on Tesla. Now, Tesla since March is up about 8 or 9 times since last March. In 1 year, Tesla's gone up about 800%. And that's even with the recent 30% drop from 900 down to 600. So, okay, so Kathy Wood's fund goes up 200% since March. You know how much money has flown into her fund since March because she shot to fame on investing in Tesla? About $15 billion. Now, okay, if you got $15 billion and it goes up 20%, you make a heck of a lot of money, but she gets to take 20% of the profits for herself. Oh, the genius is getting people to invest. Okay, once again, the bag holders. But you know what's interesting? Tesla's gone from 900 down to 600 now. Okay, so how's she doing lately? Well, her ARK Innovation ETF is losing money for the year. She's now down 25 to 30%. Okay, maybe she's not as smart as she looks, but she was smart because she invested in Tesla. She's smart because she can get people to give her billions of dollars so she can go to the casino and gamble. And if she wins, guess what? She gets to take her money off the table and go, I'm a genius. Okay, maybe I just like ranting and going off on a tangent here, but I think America's getting fleeced. I think it's getting fleeced by the Federal Reserve. I think it's getting fleeced by these SPACs, and I think it's getting fleeced by these people with these ETFs that are just starting up. These people did not make their money investing in the stock market. They did not. They made their money somewhere else. Now, me too. I made my money in real estate, and I go into the stock market to try to multiply my money. And that's what we try to do here on this channel as a stock market gambler. If you want to learn how to invest your money in the stock market, go to stockmarketgambler.com. I'll give you my free information. But what we're doing today is talking about how to make money, actually multiplying the money that you have in the stock market. If you like this stuff, give me a thumbs up. And if you really like it, punch that subscribe button. It's Friday. Everybody go out there. Have a happy Friday. Have a great weekend. We'll talk more again next week. We'll talk really soon. Bye-bye now.